We had previously determined that stock buybacks were the number one buyer of stocks in 2019. That was conclusive. They did so funded by debt. With the Federal Reserve maintaining extremely low interest rates, corporations find it increasingly wise to buy back their own stock as opposed to using that money on productive means. This has been excellent for the executive class that is able to profit off of this policy as they sell immediately after the buyback, since it pushes the price up automatically. Genius plan, it seems. But what happens when stocks start trending down? Will the Fed have to start buying shares? You came here for the truth, so let me unveil that for you. Today we're going to talk about stock buybacks. We're going to talk about the Federal Reserve. We're going to look at what's happening inside of different indicators that I've covered before, give you some updates on those, and then what it means to the average individual. As I said on the last video, none of this really matters unless we're talking about how this affects you. We're going to talk about that data today. Let's get into it right away. Corporate clients buybacks. Over the 4-week average, you're seeing what has happened since the financial crisis. Bank of America provided this, and it gives us some insight as to what is happening with the stock buybacks. It happens to correlate very accurately with what we see in the S&P buybacks in general. And I will tell you right now, we are looking at 27% increase year over year. That is extreme because back in 2019, we saw heavy buybacks, depending on which numbers you use. It was approximately $1 trillion of buybacks. They were the primary buyer of stocks. And what does that tell you? It shows how much force they are applying upward on the prices of these shares. When you look at the EPS, earnings per share, it's out of whack today. People don't realize this, and for those who do, they simply don't care. But this is the detail. You do what you want with it. If you do believe that stock buybacks will be present forever more, perhaps you can suggest to yourself that prices will trend upward as well. That's up to you to decide. Also, Bank of America provided these three here, looking at the net buys, hedge funds at the top, institutional clients in the middle, and private clients at the bottom. Hedge funds, net buying since late January 2020, institutional, net selling since early February 2020, and private clients, net buying since late January 2020. There's more details, of course, in these charts. I didn't want to bore you, just wanted to mention it. Let's move on to look at these very quickly. In the top right corner, we have the corporate clients buybacks by sector. Financials, I know the font is small, but financials is up here on the top. Underneath that is healthcare, and then we have tech. Institutional clients, net buys by market cap, and you could see the large cap, obviously significantly greater than the mid and the small cap at the bottom. Corporate clients buybacks by market cap. Again, large cap, definitely a significant portion of that. Twice a year, the Fed chair has to go in front of Congress and testify, and one by one, they all come up and they ask questions. After the Fed chair has these prepared remarks, which I'll read from in just a second, most of it's a waste of time. It goes on for hours. In fact, I tuned in the middle somewhere. I was listening to it for about an hour or so, and there wasn't much there. There were little tidbits, but ultimately, they asked these softball questions, and the response is basically, yes, we're looking into it. That's something that we're looking into. Oh, we will look into that at a later date. 2% inflation target. It's really not QE. Printing money is awesome. You know the drill. But I'm going to touch on a couple points that they made here because essentially suggesting that they expect inflation to actually hit the 2% target. And it seemed like Jerome Powell was really insisting that they're going to be able to push that higher. Obviously, they're printing a lot of money right now. QE4 is on, and they don't seem to be able to stop that. But he seemed adamant to really project that at one point, at least in that which I saw. It didn't get reported in the media, of course, but I wanted to just quickly cover this. The current low interest rate environment also means that it would be important for fiscal policy to help support the economy if it weakens. And this is basically saying if there's another downturn, we can't do much about it. So you have to step in, you being the government, you have to step in to do what you gotta do to pump it back up. Putting the federal budget on a sustainable path when the economy is strong would help ensure that policymakers have the space to use fiscal policy to assist in stabilizing the economy during a downturn. A more sustainable federal budget could also support the economy's growth over the long term. Basically saying, get your deficits under control, you got some serious problems, and you're not doing a good thing for us as the Federal Reserve the next time this comes around. Finally, I will briefly review our planned technical operations to implement monetary policy. The monetary policy report, which, by the way, that was what I read to you previous episodes, details of our operations to date. Last October, the FOMC announced a plan to purchase treasury bills and conduct repo operations. These have been successful in providing ample supply of reserves to the banking system and effective control of the federal funds rate. By the way, at one point, he actually said the Fed funds rate went a little bit above our range, and so we needed to take care of it. He didn't give the full story there, that's for sure, because they had a big problem and they know specifically that they are unable to resolve it. As our bill purchases continue to build reserves toward levels that maintain ample conditions, we intend to gradually transition away from the active use of repo operations. You heard it here first. February 11, 2020, the Federal Reserve is going to gradually transition away from repo operations. Okay, you heard that here. That's what he said in front of the Congress testifying. Also, as reserves reach durably ample levels, we intend to slow our purchases to a pace that will allow our balance sheet to grow in line with trend demand for our liabilities. What the heck is he talking about? If you think about this right now, he's saying that they're going to slow the purchases. If it's $60 billion per month, are they going to go to, let's say, $20 billion per month? And then that's somehow organic growth? Is that what they're talking about here? Of course, they must consistently increase the balance sheet over a period of time in order to get that interest rate down. There's no other way. Remember this. This is so key to understand. All of these technical measures support the efficient and effective implementation of monetary policy. They are not intended to represent a change in the stance of monetary policy. As always, we stand ready to adjust the details of our technical operations as conditions warrant. Don't worry, everybody. We'll be here to take care of you and rock you to sleep. Well, those repo operations that are apparently going to be stopped at some point in the near future are still being oversubscribed, and you can see that here on the chart, or you can go to the Fed repo website from the New York Fed. This is an article out of the Hill just covering a few points from what I was just talking about. I wanted to show you that the mainstream media is picking up on some just small little tidbits, but it is ultimately flying completely under the radar of most people. They don't know what the hell's going on. Do not forget about what's going on with the ECB. We need to understand what's happening with Europe because they're in negative interest rate territory already and they can never get out. Jerome Powell said in the question and answer portion in front of Congress that they do not intend to go into negative interest rates, that they will probably just print a whole bunch of money next time around. That's literally what he was saying when he was pressed by one of the people in the Congress. ECB, different situation. European Central Bank President Christine Lagarde said her institution's loose monetary policy is hitting savers and stoking asset prices as she called on governments to do more to boost the economy. Wait a second. This is intense. Let's read the quote. The longer our accommodative measures remain in place, the greater the risk that the side effects will become more pronounced. When interest rates are low, fiscal policy can be highly effective. It can support euro area growth momentum, which in turn intensifies price pressures and eventually leads to higher interest rates. I believe that the Federal Reserve is suggesting that what we're seeing with the ECB is not where they want to be. They've lost a lot of credibility in this case here, and we know exactly why. They say we're going to get to 1.5%, 2%, maybe even a little bit more inflation. Who knows? It's going to happen in the next few years. Don't worry about it. And then we hear the same thing year after year after year. Towards the bottom, Lagarde's strategic review will primarily consider whether the institution should change its inflation goal of below but close to 2%. Wow, that's a game changer right there. You just change that little bit of wording and it's gonna make a fantastic difference for what happens inside the economy. I would just give her a medal right now. This is fantastic. It's unbelievable what they tell us in these times. They go in front of people, they give these people medals, they put them on the cover of magazines and call them heroes, and ultimately they don't know what the heck is going on, or at least that's how they come off. Northman Trader put this on his Twitter. Markets have been conditioned to trust central banks to FOMO by every dip. These things are so deeply conditioned into the markets that we have disconnected quite a bit from the fundamentals, and hence we have a central bank created bubble. This is 100% completely true. I do agree with it. Let's look at this. Morgan Stanley Global Markets Chief sees stocks at a 100-year high versus the rest of the world. And that's what you would see if you were just skimming the headlines. But I think what's important to know is what they didn't quote right in the headline. US stocks currently account for 56% of the world's market value, but only 25% of global economic output. That's a huge disconnect. So I do believe that once we see a major global economic crisis, what comes up from the ashes might be a lot different than what we see today. If you look at the stock market on a technical level, this is overbought sold composite that is from Real Investment Advice. It's not the highest it's ever been, certainly, but it is extremely overbought, and it's going, upward of 90 right now. It's near a record high, and that shouldn't surprise anybody. There's a good way to look at this type of data. You could see it all for yourself. I think it's important. It just gives you some insight as to what's happening other than looking at the prices themselves. Jeff Bezos' stake in Amazon.com barely budged over the last decade. That started to change. He sold 2 million shares, that's $4 billion worth. But what I wanted to make clear here was that it's part of a pre-arranged trading plan between January 30th and February 6th. I personally think that it's wise for him to sell off some shares. Almost all of his wealth is in Amazon shares, and it would be good to regularly take off the top on that, particularly as the stock continues to go higher and higher and higher. He's bought real estate, he's bought land, he's got personal issues he's dealing with. I don't necessarily think that this is an indicator that he thinks this is the top, but I just wanted to mention it here and just see if it continues. That's all. I've tracked this before and you've seen me cover it here on the channel, but essentially we're looking at how many people are shorting the VIX index. It's not at a record at this moment, but it is extremely high. I mean, you could see it here on the chart if I pull out the highlighter, just to give you an idea of the direction in which this has been heading. When you see this, it tells you that people believe the VIX index will continuously fall lower and lower and lower. We had an extreme example back during January 2018 where it toppled in the markets. Actually globally, things started to just get destroyed, and there are more people shorting today than at that time. So we know something is really, really crazy today. UniCredit confirms 6,000 Italy job cuts as union talks begin. And guess what they're going to do? Cutting 6,000 jobs. Where do you think they're going to put the money? Because they, quote unquote, increase productivity now. Well, of course, they can do stock buybacks. That's right. Stock buybacks are the solution to every problem. You don't have to worry. Those 6,000 people that got their job cut, hey, screw you. There's a lot of employees that work for UniCredit. 6,000 is only so much of a percent, so don't worry, Money GPS, shut your mouth. China's battered banks brace for the worst case economic scenario. More than 13% of China's banks were rated as high risk by the central bank. What does that tell you? We've got an extreme scenario that is taking place today in the financial sector. Powell was asked about that very briefly. It was a softball question, but I mean, you don't have to worry about it because he said everything's going to be just fine. Initially, I was going to do a full breakdown of what happened during this congressional testimony and try to give you some more quotes and everything from it. Honestly, it was making me sick listening to it. I couldn't take it anymore. An hour was bad enough, but I tried to give you as much as possible because I know the average person, there's no way they can sit through that. It's just disgusting. They lie to our faces. It's terrible how the Congress is unaware or just really doesn't care. But regardless, it's such an important time and they waste it. They waste it minute by minute by minute. Every question they ask, it just upsets me further and further. Anyway, that's all for this video. If you found it informative, hit that thumbs up button. When you click the like button, you support this channel. When you watch the ads, you support this channel. You don't have to pay a dime and you are supporting the channel. So thank you very much to each one of you who do that. If you want to learn about e-commerce, about how to sell on Amazon, I have a free 100% no catch, 100% free e-course for you to check out, the AmazonGPS.com. If you want to learn about financial information, the financial education that was robbed from you from the school system, I created these 2 books for that very purpose. You can check them out at the link in the description if you want the audiobook, themoneygps.com. Hang on a second, hold on, don't go anywhere. Have you seen this video? Really good data in here. There's a lot to get into. If you haven't seen it, click the link. I'll see you there.